Welcome back. I'm absolutely pumped to jump into today's explainer because we're looking at a market setup that literally has everyone on the edge of their seats right now. We're going to take a super critical look at the upcoming week's market triggers, dissecting everything from the big macro drivers to the key commodities, just to see where the real momentum actually lies.
All right, so to figure out where we're headed, we got to look at what literally just happened. Last week, a hard line was drawn at 39.65 on the gold chart. And get this, gold tapped 39.65 exactly to the dollar before bouncing up with some serious momentum to close the week at 40.88. I mean, it was a totally precise, massive move right out of that zone.
So, what does this all mean? Well, let's dive into it, because that massive bounce brings us to the central mystery of this whole explainer. Is this bounce the real deal? Are we totally done going down and officially entering a bullish reversal? Or is this just a trap before the floor falls out again?
Which brings us to a pretty crucial concept. Look, the bounce off 39.65, it looks bullish. It absolutely feels bullish. But you really got to be careful here. Why? Because the exact setup that looks like a brand new reversal is frequently the exact same setup that turns into a relief rally. This is just a temporary bounce designed to kind of trick traders into buying in right before the primary downtrend resumes for its next major leg down.
So here's our roadmap for today. We're going to check out the US dollar marching higher, crude oil's bearish channel, silver's downward duplication, gold's true path, and finally, the NFP jobs catalyst.
Section 1. US dollar marches higher. The macro driver.
You know, the sheer strength the US dollar is projecting right now is just incredible. Looking at the weekly line chart, the dollar index has broken out right above its parallel channel resistance. And here's the crazy part. There is absolutely zero sign of bearish divergence. None. Now, when the market opens on Monday, yeah, we're expecting a short-term kind of brief corrective drop. But make no mistake, the overall trend is expected to complete that quick drop before just marching straight higher.
And we can see exactly where it's heading. The immediate levels of interest sit at 102.01 and 102.58. But the real story? That's in the upside Fibonacci extension targets. Think of these numbers, 102.68, 104.4, and 105.76 as, like, massive gravitational magnets. They are inevitable forces just pulling the US dollar higher as it continues its breakout move.
Section 2. Crude oil's bearish channel, searching for a bottom. Now, shifting gears to crude oil. Its macro daily structure remains heavily bearish. We're talking a relentless sequence of lower highs and lower lows stuck in a falling channel. But, and this is a big but, it brilliantly illustrates what happens when a trend starts to tire out. Oil has actually formed a smaller downward channel inside the broader one, and towards the end of this smaller channel, it's printing double bullish divergence. Basically, that means the sellers are just completely exhausted. A bounce is definitely brewing here, and the very first upward target it has to break is 76. So if it does break 76, we've got two clear scenarios for oil. Probability 1 is a bounce up to 82.46, which is the top of that smaller channel, followed by a drop. Probability 2 is a much sharper bounce that blows past the smaller channel entirely, hitting up into that 87 to 91.2 range. But hey, notice the outcome here. Even in that best-case scenario with the sharp bounce, we expect the primary downward trend to resume right after hitting that resistance.
Section 3. Silver's downward duplication, breaking support.
Moving on to silver. Honestly, the weekly pattern is aggressively bearish with literally zero reversal in sight. The daily frame is where things get super critical, though. Silver recently broke right below the support of a sideways channel. It printed a massive move down, had a little corrective bounce to a lower high, and then just broke the floor. In technical setups like this, the market has a major tendency to just duplicate its previous massive downward move, basically mirroring that past plunge.
Which builds a really clear if-then roadmap for us. We're expecting a short-term bounce, sure, but unless it breaks 67.48 to confirm an actual reversal and ultimately closes above 70 to completely invalidate the bearish plan, the downside is steep. We're talking massive magnets pulling it to the 53 to 54 zone, down to the channel end at 47, and if that breaks, wow, we could see it clean out support all the way down into the $39 to $40 mark.
Section 4. Gold's true path revealed. Answering the mystery.
All right, back to the start of the show. Let's answer that mystery we opened with. Was gold's explosive bounce from 39.65 a true bullish reversal or a super dangerous relief rally trap? Well, the crucial point is separating the short-term noise from the macro structure. Short term, on the 15-minute and 1-hour charts, gold looks bullish with targets at 41.20 and up to the 42.04 to 42.37 zone, mostly thanks to that dollar dip we talked about. But macro? The overall weekly and daily structure is undeniably bearish, totally trapped in a falling channel. We'd need a daily close between 42.14 and 42.68 just to get a soft confirmation of seller weakness. And to actually break the bearish structure, it would have to completely blast past its previous high of 43.80.
And guys, here is the harsh reality of the trap. That awesome bounce from 39.65, it's pretty much just expected to retest the 4200s, grab some liquidity, and then keep heading lower. The expected trajectory takes it straight to 37.95. Then, the major target zone sits firmly between 36.24 and 35.74. Honestly, in a worst-case scenario before a real reversal happens, gold could literally plummet all the way down to the 33.09 to 31.53 level. Kind of wild, right?
Section 5. The NFP Jobs Catalyst, the ultimate wildcard.
Now, as you probably know, technical charts only tell us half the story. They give us the structure, but macroeconomic data, that provides the fuel. And this week, we've got the ultimate wildcard, the Non-Farm Payroll, or NFP announcement. Because of the 4th of July holiday, this all-important jobs data is coming a day early, on Thursday instead of Friday. This report is going to be the absolute catalyst that either confirms these bearish setups or completely invalidates them.
So I want to leave you with this thought. Technicals prepare you for the possibilities, but data decides the outcome. The charts have essentially laid a perfect trap outlining massive downside potential for gold, silver, and oil, while the dollar just marches higher. The big question you got to ask yourself now is, will Thursday's NFP numbers validate this massive bearish trap? Or is a surprise in the data going to trigger a reversal that flips this entire script? Keep a really close eye on Thursday. Thanks for hanging out with me on this explainer, and keep learning.